And here's the deal, you guys. Nearly every time I've tried to time the market throughout my investing journey, I have been proven wrong. Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer, ADP. I'm glad you're here. Now let's dig in. Welcome back, Freedom Point listeners. I'm your host, Jeremy Dyer. In today's episode, what we're talking about is how to avoid the top 3 investment hurdles. There are investment hurdles that I see many investors making. And quite frankly, I have made these mistakes along the way myself. So without further ado, number 1, timing the market. It can be very difficult to figure out when is the best time to get into the market, or for that matter, when should you get out of the market? And here's the deal, you guys. Nearly every time I've tried to time the market throughout my investing journey, I have been proven wrong. There was a home that I flipped and sold in 2016 in Lake Elmo, Minnesota for $340,000. And I told my wife, this is at the top of the market and we're going to max out profits and move on and invest our money elsewhere, just to watch that same home go on to become valued at almost $500,000 over the next few years. I could not accurately time the market in that case. Another example, a buddy of mine convinced me to invest in a publicly traded crypto mining company that almost immediately fell 50% from the time I bought in. Then I decided to double down and I decided to invest even more because I'm going to scoop this thing up at a discount, only to watch the stock continue to fall another 30% from the time that I bought in. We're still waiting to see the ultimate outcome of this last example. There was also a year that I sat on the sidelines for about 6 months, just waiting on that perfect opportunity to get in, and had given up about 6 to 8% annualized yield. So I have a solution that has made all the difference for me. The thing that I keep turning back to nowadays is that time in the market beats timing the market. So staying focused on the long term. Number 2 is lack of time, education, or expertise. I can't tell you how many investors I've spoken to over the years that believe they need to be the experts. They need to know everything before they decided to go ahead and get started with an investment. What that can often lead to is analysis by paralysis. You get so caught up in all these blogs and articles and podcasts and books and mentorships and masterminds to where you don't end up taking action because you're just trying to fill in all the blanks. I'm all for being fully educated on the investment you are making, but eventually you need to take action. There are all types of investments out there for all different types of people at all different stages of life. And I'd be willing to bet that there's a few that may be appropriate for you. Back in the day, I was doing everything with single family homes. I was buying fix and flip homes and doing all the renovations. When I looked back at myself in the mirror one day, I realized that I'm certainly not the expert. I had imposter syndrome. I didn't have the formal training, the expertise, the connections. I was no handyman. So what the heck am I doing? And that was at the point in my journey where I decided I'm going to start partnering with people and investment sponsors who are the experts in the real estate industry, who do have the proper training that can really do a lot better, quite frankly, than I can do. And this is the classic example of what a real estate syndication is, which is the majority of what I invest into today. And it's where the limited partners, which I am, can rely on a general partner or an investment sponsor to find these properties, underwrite them, renovate them, and essentially execute the business plan on your behalf so that you can kick back and share in any potential profits that property may generate. So the takeaway here is that sometimes the best knowledge is simply knowing that an option exists for you. That brings us to number 3, which is the fear of losing money or the fear of losing everything. And throughout my journey, I can tell you that there's one thing I've found to circumvent this fear, and that is diversification. So most assets go in market cycles between expansion and contraction. The economy goes through cycles of expansion and contraction. So knowing this can first and foremost give you some perspective and peace of mind, knowing that it's not if, but rather when. And we're already discussing trying to time the market and how that's really difficult for most people to do. But what we can do is diversify in different asset types that have different business plans that are located in different geographical regions and among different types of sponsors or general partners in the case of syndications. So that right there is 4 different ways to diversify all within real estate. And we haven't even discussed stocks, bonds, gold and silver, oil and gas. There are more and more ways to diversify outside of real estate investing. I want to leave you with one additional consideration, and that is dollar cost averaging. You see, I'm the type of investor that invests primarily in the real estate sector, not saying it's right for everyone or right for you, but it's right for me because it's what I know and understand the best. And I found it to be a very favorable asset class throughout down cycles, stagnant markets, and uptrending markets as well. Now, as you're well aware, over the last year and a half, interest rates have increased dramatically at the fastest pace that we've ever seen in history. Have you ever heard the saying that the bull takes the stairs and the bear jumps out the window? What that refers to is how markets typically behave. In other words, a bull market, which is an uptrending market, takes many years in most cases to build up and incrementally rises. But when recessions come and when the market shifts on us, it usually comes fast and it comes quick. And that's symbolic of the bear market, or the bear in this case jumping out of the window. So to bring this analogy home, I've been investing in real estate year over year. And every year I've been paying incrementally more for the same type of real estate asset than I had paid in the years prior. I've been at it in the multifamily space about 7 years, and now we're in the midst of a market shifting. So that is good news and bad news in terms of interest rates. The bad news is due to the increase in rates so rapidly, a lot of the properties that I've invested in over the last couple of years might be below the pricing we paid for the property. So that's not good news. But the good news is that the new deals that I'm investing in today here in 2023, in some cases, are being purchased at a discount of 20 to 25% relative to pricing a year or two ago. So it's the classic example of buying the dip, and this is what I mean by dollar cost averaging over the long run. As an investor, I'm getting the average price of the real estate because I know markets don't always go up. They don't always go down, and they don't always stay sideways. So something to think about. Thank you for listening to the Freedom Point podcast. I'm your host, Jeremy Dyer. I appreciate you being here. Please connect with me on LinkedIn or via startingpointcapital.com. Have a great rest of the week.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.